What's up everyone, it's Scotty with MoneyVest. So markets here obviously selling off quite aggressively. We got the Nasdaq, S&P and the Dow Jones, all three indices selling off very strongly here on the day. And of course we started off really well. We started off with a very positive pre-market gap up, but of course sold right back down intraday, something that we were kind of talking about during our live stream, something that we were prepared to see because it's very normal for us to see a huge gap up, profit taking intraday, and of course continue to sell off on that momentum. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. There are 3 to 4 spots left with that 16% annual discount. If you're interested in joining us, I posted a members only private video earlier today giving you guys a life update on what my plans are moving forward, where I'm currently situated, where I'm currently based, and what's the asset allocation going to look like moving forward, because there's 10 different assets that I will be investing in over the course of my investing career and my journey. So all that is detailed out in that video. Definitely do check that out if you have the time. Again, all you have to do is go down in the link below in the comment section. Of course, I will pin it, and you also get a 16% annual discount, and you can join our MoneyVest community. So this right here was the state of the market here. So we did have, again, majority of stocks pushing higher, over 4,000 stocks advancing on the day with about 2,000 declining, but it wasn't the right stocks, right? So it wasn't the right stocks that were actually pushing higher because, of course, big tech, large cap was the one that was selling off pretty aggressively, and that's one of the reasons why the markets look like this, where we've got the Dow Jones down over 373 points, S&P down 1.3%, and the Nasdaq down almost 2%. Now, here's the thing, right? I mean, one of the things that I've learned over the last 8 to 10 years that I've been doing this is that sentiment trumps all logic and rational behavior, okay? Because as investors, we need to be logical thinkers, right? We can't be driven by our emotions, right? Emotions, if they control you, it's not just about trading, investing. Even in life, they will get the best of you, right? So when it comes to trading, investing, sentiment trumps all logic and rational behavior. As investors, we need to be logical thinkers. We need to be rational thinkers in understanding what works, what makes sense over long periods of times, something that is repeatable, a process that is repeatable. And now it's gone to a point, especially on YouTube, that it's very easy. It's like this for me to weed out from some of the more intelligent viewers versus maybe not so much. Somebody who's just getting started, who doesn't understand valuations. Because we did get comments on my video from NVIDIA yesterday, things like, you know, your price was sub 300 4 days ago. Now when it's $500 plus, the buy target's changed to low 400s. I'm just saying, this person basically mentioned, how is that intrinsic value treating you? Seriously, that's why always all cost average in companies you believe in, moats, balance sheet, products, real growth perspective, etc., etc. So there's the thing, right, that we've already talked about. When information changes, right, which is constantly changing, right, every single day you're getting fed with the new information on the market, on the entire stock, the company, the announcements, the partnerships, the macroeconomics, interest rates. There's just so many variables because markets are not a very simple trading machine. They are very chaotic because there's so many variables at play here. So when information changes, you gotta be able to adapt. And what that person's talking about is that I did a video on NVIDIA last week going over the actual growth rate and expectations from what we knew back then last week. We did not have the earnings, of course, and then I did a revised, updated version of that after the earnings came out, right? So as you guys know that on this channel, we do our fair value updates calculations 4 times a year, right? Every time the earnings comes out, we do it 4 times a year, every time we get new information. As John Maynard Keynes once said, very famous economist, when facts change, I change my mind. What do you do, sir? And that's very true, right? Because in the markets, facts are changing constantly, right? So we're getting new information. So why should we keep our fair values, our buy targets the same, right? So we have to update them, and that's really what I did. And now, of course, from $300 to $400, that's the fair value update. Apparently that's a problem. And, you know, even if I'm looking for deals on intrinsic values, apparently that's a problem as well. And of course, when that person mentioned, how is the intrinsic value treating you? That's just really taking a shot at me, saying that, hey, the prices are way too high than your intrinsic values. How is that treating you? You're not able to buy stock. I'm completely okay with that. I'm fine with that. I would much rather get a really good deal than overpay for a stock just based on that momentum. If I'm not comfortable with the valuation, I'm not going to think about it twice, because I understand what overvalued means, what undervalued means, what fairly valued means, what buy targets are, what fair values are, what price targets are. Nvidia is an anomaly. Nvidia is in the top 1% of rare stocks and companies that was at the right time, at the right place, doing the right things. Are you going to find 10 more Nvidias? Find me 10 more Nvidias and I will today not calculate fair values at all and just become a momentum trader. Find me 10 more Nvidias and I will literally just throw all my fair values out of the window and just trade on momentum. You can't. You can't. It's not a repeatable process. You can't find 10 Nvidias. It's only one, right? So just because it worked on Nvidia, it doesn't mean it's going to work on every single company. What I'm trying to teach you with these fair value calculations is a process, right? Is a system that you got to lock down and understand for the rest of your life, for your investing career. Because you're not going to find 100 different Nvidias over the course of your investing career. There's going to be one. There's going to be very few. Tesla's another one, right? Very rare company, very rare stock. So that was something that I wanted to address. And look, nothing wrong with these comments. It's just having an understanding and just knowing what valuations really mean, right? Valuations are subjective, right? So if this person basically believes $500 is undervalued, by all means, go ahead and buy it at $510, right? Buy at $600. Just keep buying it on the way up. That's totally fine. Just let me know what that looks like 5 years later, right? Let me know what that looks like 10 years later when you are repeating that process over and over and over again across many stocks. Just let me know where you are 5 years from now. Let me know. Stock sell-off Thursday is Nvidia-led rally fizzles. Dow drops more than 300 points. So obviously we did see a pretty significant sell-off. So stocks fell sharply Thursday after a tech rally. And of course, we do have the big Fed meeting, the Jackson Hole Economic Symposium. And Friday at 10 a.m. Eastern is when Chairman Jerome Powell is going to be talking. Obviously, during that symposium, I will be live to cover that as well. And of course, this right here, the tech is the worst performing sector on Thursday. AMD did drop a little bit over 7%, and Enphase Energy also dropping pretty aggressively over 6%. I mentioned a potential head and shoulders pattern for the market from a technical perspective, so I wouldn't be surprised if we do end up breaking down a little bit more after getting the rejection from that resistance there. So Microsoft, Apple, Adobe, Oracle, Google, Meta, Amazon, Tesla, a lot of them obviously selling off pretty aggressively. Nvidia was basically flat. It was up over 9% pre-market, gave back all the gains. It's still possible that it ends up rallying, right? Tomorrow or Monday or next week or whatever. It's still possible that it ends up rallying. But again, don't make the exception the rule, right? It's a very, very common assumption to make that one exception, right, the actual rule. Think of it this way, right? If somebody wants to become an actor, if somebody wants to become a professional athlete, right, to do that, it's again the top 1%. There's nothing wrong in actually working towards it and having a dream of becoming an actor or a professional athlete. But at some point, we have to follow a system, follow a process, understand the realistic odds of how many people actually do that. It's the same with Nvidia. Nvidia is an anomaly. How many stocks are actually going to replicate Nvidia? Very few, right? Because it's incredibly challenging, incredibly difficult to move and have those upgrades and have that sentiment be that company that moves like Nvidia. So just wanted to again explain, and we're having these conversations over and over again oftentimes because, like I said, sentiment trumps all rational behavior, all logic, right? We had the same conversation on Upstart. We had the same conversation on Zim Integrated Shipping. We had the same conversation on Enphase. We've had the same conversation on Tesla. We had the same conversation on Meta. Like, there's so many stocks I can list right now off the top of my head that we've already talked about. It's market behavior. It's all going up and down. It's a cyclical behavior of the market. So don't get sucked into the in the moment, right? I understand Nvidia is a hot shot stock right now. Everybody wants to own it. Everybody wants to trade it. But ask yourself the valuation, right? That's all I'm going to say. Consumption, health, consumer defensive, healthcare, energy, industrial, real estate, all of these stocks here selling off. Obviously, the entire market was down today, and all 11 sectors in the S&P 500 selling off. And in the last 1 week, we've had consumer, cyclical, technology, real estate all pushing higher, with healthcare, defensive, energy pulling back. And over the last 1 month, of course, all 11 sectors are also red. in the last 1 day. Futures, commodities, lean hogs, sugar prices, oats pushing higher, lumber, orange juice, and natural gas selling off, with Bitcoin just a little bit over 26,000, definitely selling off here, and Ethereum is just going to be over 1,600 as well. So when you come over to the market, so if you take a look at the volatility, we did get a little bit of a spike back up over 7.7%, so definitely rallying back over 17. Resistance is going to be closer to 20 for the VIX here. And of course, if you come over to Ethereum, again, just consolidating sideways. It did get broken down from that support of 1820, and right now we are just really consolidating sideways. BTC, again, also just consolidating sideways after selling off pretty aggressively, so we are really just trading in that range. Support level is going to stay put at $25,000. Crude oil here, up over 0.5%, a little bit under $80 a barrel. So this right here is going to be that resistance to watch for crude. And of course, support level is going to stay put at $73 per barrel for crude oil as well. And right now we're just starting to see a bit of a pullback at the moment. Going over to S&P 500, so big rejection there at the moving averages that we talked about. So if I bring up the 50, the 21, and of course some of those other moving averages getting rejected at those levels, pretty massive red candle coming in, so selling right back down. This is still, I would say, a part of that head and shoulders potentially forming. Support level is going to stay put at 43.30, so we did get up to as much as 44.58, a level that we were talking about. And again, you can kind of see the pinpointed level at that resistance. Sellers stepped in to bring us right back down. Support level is going to stay put at 43.30 for S&P moving forward. So if you do see end up seeing a breakdown below this level for S&P, then of course it's possible that we come all the way down to 4,200. That's going to be a potential correction territory for the market. And of course, a lot of that depends on Jay Powell. As I've already mentioned, I think he is going to be hawkish. He is going to already say things that we know. The market reaction may not be as severe as what we have seen last time, but it can still create some volatility, of course, and could create some momentum for potential downside. So next level really is going to be down to 43.30, maybe another 40-50 points for S&P from these levels. NASDAQ here with another brutal sell-off and almost perfectly getting rejected here at this resistance. So this is the same level that we got rejected in back in June, and a potential head and shoulders forming here. Support level is going to stay put down to 13,200 for the NASDAQ. And of course, if we do end up seeing a breakdown below this level, then the next support is going to be all the way down to 12,250, kind of in line with all these moving averages. Talking about Apple, and Apple also selling off and getting rejected at those moving averages. So you can kind of see that we broke down below that uptrend, and then we came down even further, tried to retest back up to that resistance, got rejected again. Sellers stepped in to bring us back below 177, down over 2.6%. So in my opinion, there is maybe more downside if, of course, the entire market starts accelerating that sell-off further. Next support is going to be all the way down here to those moving averages. Talking a little bit about Amazon, and Amazon here also getting rejected and selling off from that $136, $137 level. So this right here is going to be that resistance level to watch for Amazon. And of course, we're starting to see that sell off even further. Higher low is going to stay put right there at that 50 SMA, sitting roughly at around $130, $131. And of course, if we do see a breakdown below this, next support is going to be $126 per share for Amazon moving forward. So that's going to be that next near-term support to watch. Tesla here, on the other hand, also getting rejected at that resistance. You can see how much we're struggling, right? We're struggling to break out of those resistance levels at 245, 248, and Tesla back at 230. This right here is going to be that resistance in line with those moving averages, kind of inside this red circle that I've pointed out for Tesla. And of course, we got a huge demand and a lot of supports in roughly in the $225, $228 per share for Tesla as well. Talking about NVIDIA now, of course, and NVIDIA with a very strong red candle coming in. So it was obviously gapping up pretty aggressively. All the profits basically being taken off the table. This is simply profit-taking action, profit-taking environment, right? Because when a stock's trading at an all-time high, right, it's gapping up pretty aggressively, and then it ends up being red. Well, guess what? Most people that are selling today are taking profits. Most people are selling on NVIDIA today, taking profits, selling them to bag holders that are going to end up obviously holding the stock at an all-time high. Unless, of course, NVIDIA turns, buyers step back in, trades back up to $550, $575, $600. But then, of course, you get into that greater fool's theory that if you're buying at $500, you're really hoping someone else would come around and pay you a higher price for it 6 months later, 3 months later, 3 days later. and hope is not a strategy, right? So that's really what happened today, because think about it again. If a stock's trading at an all-time high, everybody who owns a stock is profitable, right, on that stock. And if it's selling off intraday, that means there was some profit taking, and the people that were buying from these profit takers were basically just taking risk away from them, over onto them, with the, in my opinion at least, the most unfavorable risk reward trade-off there is. So definitely selling off quite a bit. And again, we do have some levels, of course, to watch. 240, 250s, like those right there are going to be some support levels to watch for NVIDIA. AMD definitely sold off pretty aggressively, breaking down below that support, and of course down almost 7%. So we're watching low 80s as ways for me to sell puts here on Advanced Micro Devices. So those are going to be some levels to watch, of course, all the way down to as low as $80. That's going to be another very important support to watch for Advanced Micro Devices as well. Talking about PayPal, and PayPal here on the day was also down 1.7%, so seeing a bit of a pullback. Again, support level is going to stay put at $57, $58 per share. Resistance all the way up to 69 to 70 bucks for PayPal. Square here, on the other hand, also pulling back a little bit, down 2.7%. This right here is going to be that support level to watch for. Block sitting inside this green rectangle, roughly at around $51, $52. So lots of consolidation sideways at those prices for Square. Talking about Meta Platforms, and Meta also selling off down to 286, down about 2.5%. Resistance is going to stay put, roughly at $300 per share for Meta, and of course support level is going to stay put down to 257. I've significantly trimmed my position in Meta Platforms at around $299 and $303. So I'm happy with the profits that I've taken off the table, and I'm able to kind of increase my cash exposure for opportunities in the future, and of course dollar cost average at better prices when they do eventually come down. So support level is going to stay put down to 257. Talking about Netflix here, and Netflix also selling off pretty aggressively, down almost 5%, breaking down that support once again, and next level is going to be down to $380. So that right there is going to be that next support. Resistance stays put at 458 for Netflix. Talking about Google here, Google also pulling back, down about 2%, so selling off pretty aggressively. Support level is going to stay put down to 127, all the way down to as low as 115 for Google, and of course resistance is going to be at 132 right now. So we are still seeing a lot of back and forth here for Google stock. It was consolidating sideways for the longest time before seeing a breakout and then reversing right back down to lower levels, and of course 127 is going to be that support. Microsoft, on the other hand, also with a pretty big red candle here, selling off pretty aggressively. Support level is going to stay put down to $313. So that's going to be that next level to watch. And of course, all the way down to $292 is going to be that next support in case we break down even further. Shopify, on the other hand, also selling off pretty aggressively, down about 2.2%, getting rejected at those moving averages. For Shopify, support level is going to stay put roughly at around $54 per share for the company. And of course, if you do end up breaking down below, some of that right here are going to be next support levels at $40, $41 per share. And finally, we get Enphase, ENPH, definitely selling off pretty aggressively, coming down to our good deal area in the 120s. So breaking down further, down 6%. So we'll be doing a separate video, maybe going over some detailed analysis in our Discord on this company as well, and what my plans are moving forward with Enphase Energy. So bottom line is that, valuations will always matter. Fundamentals will always matter long term. You can disregard it today. You can disregard it for tomorrow. You can kind of rely on momentum trading, but eventually fundamentals and valuations will win long term. The quality of the company trading at the right price is all that's going to matter when you're looking back 5 years later, 10 years later. So hope you guys enjoyed this video, and I do appreciate all those comments. Again, there's nothing wrong with them. I appreciate them. It kind of keeps me on the edge, keeps me on my toes to kind of explain all these things and why I do what I do. Give you a little bit of a logic as to why I'm doing what I'm doing, right? Because the goal is to find deals, right? If you're not finding deals, there's nothing attractive about buying at any price. Like, I can go out there and I can spend $10,000 buying 10 different stocks, not care about the price. There's nothing skillful about that, right? Anybody can do that. Anyone can look up a stock and be like, oh, this one's up 10% in the last few days. Let me just go ahead and buy that. There's nothing skillful about that. Anyone can do that. But the real value, the real skill comes in when you can actually figure out what is the right price for this item, for this asset, for this stock that will make me money long term. That's the real skill. That's the real value. That's what we're trying to do on the channel. So valuations are everything in my opinion. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. There is a 16% annual discount available till the end of this month. We'd love to have you on board. I did give everyone a live update in our members only private video. So hope you guys enjoy. As always, happy investing. I'll see you all in the next video.